Hey, good morning, everyone. It's Joe Bloddick here for Canadian Mortgage Weekly. I'm with my little mascot, Interest Rate. We are here together. We're going to conquer this show together today live. She's actually going to help me predict what the interest rates are, right? Interest rate? Yeah, she's pretty awesome here. She's been on a lot of my shows here. She took a little bit of a break for a while, but we're going to get her back on today. And hopefully she doesn't take a trip to the bathroom here while I have her on my lap here today for this particular episode. But we're going to get her to do a prediction a little bit later. The interest rate announcement does come out around, let's see, it will come out around 9:45 a.m. today. And what we'll do is we'll announce it live and we'll announce it right here on Canadian Mortgage Weekly. This is Canada's weekly mortgage news podcast. And what I like to do is I like to go through a lot of the uh, updates of what's going to happen to your lending products if we actually see interest rates change today. And it's a toss up. I mean, what I've been seeing here today, there's a lot of people saying that interest rates will continue to go down. But there's also a lot of people saying that, they might go down or they might just stay the same for the time being. And the reason is because we've been seeing uh, a lot of people saying that with these tariffs and everything, they haven't really, like Canada's been doing really well with the tariffs in the sense that we haven't had tariffs applied in a massive sense like some of the other countries around the world by the United States. Because of that, there hasn't been too much of a hit against Canada. But we're going to get all into that in a few moments here. What I like to do is just, again, if you're just joining me here now, my little girl here, her name is Interest Rate. She's helped me predict a lot of the interest rate announcements over the last few years. I think she's gotten only one wrong. And how I do it is she's going to eat the lettuce, rates are going to go down. If she's going to eat the hay, rates are going to stay the same. If she's not going to eat anything, the rates are going up. And usually, she eats something. So something's going to happen today, either a pause or rates are going to go down. If you guys have a prediction, I'd love to hear it in the comments below. Just put your comment below as to where you think rates are going to go. And I'll watch the comments here on my screen and we'll see who gets it right. But what I like to do is just lead up to this interest rate announcement that's happening in about 12 minutes from the Bank of Canada. We'll announce it live right here on Canadian Mortgage Weekly. And it's going to be happening in 12 minutes. And before we get to that, we're going to look at some of the news leading up to today's decision to see what is happening in the market and what's the market saying is going to happen. So a lot of the things that economists predict their interest rate predictions on are these metrics. The first one being unemployment rate. And where is the unemployment rate in Canada? Well, I brought it up here so you don't have to. Over the past year, it's up 0.8%, but over the last month, it's actually stayed the same. So 6.5%. But overall, for the year, we are up as a country with unemployment by 0.8%. So unemployment has gone up. That's not a lie. That's the truth. And that's going to be impacting how the Bank of Canada looks at interest rates today, because if unemployment is going up, then that could mean a lot of things. It means people are losing their jobs, and the Bank of Canada gets worried because they don't want that, especially right before an election. All right. Tariffs, as you know, Donald Trump has been talking about the tariffs all day long, all week long. That's another pressure we are seeing in the Canadian economy. However, we keep saying that tariffs are being talked about and then they are paused. Tariffs are being talked about and then they are paused. And I think right now, being in this pause territory is not going to put too much pressure on rates coming down today. But a lot of damage has been done with all these talk about tariffs. The fact that this has been happening, I think there's a lot of damage that has caused this. The talk of tariffs have caused the stock market, and a lot of companies have been reevaluating how they source their material, how they source their goods. Where are they going to get their product from? Are they going to get it from Canada? Are they going to get it from the United States? What are they going to do? So if they get it from the United States, there's going to be tariffs. So we'll have to see how Tiff Macklem coordinates the interest rate announcement today with the tariffs and how that is mentioned in the Bank of Canada announcement. Okay, you listening to this interest rate? I got my little mascot here. She is interest rate. She's my mascot for the videos here today. She helps predict what the interest rate is going to be. I mean, I look at the data, but she looks at the lettuce and she looks at the hay and she makes her decision, right? So she's going to make her decision in just a moment here, right? That's right. All right. What else we got here? Well, the last rate announcement, we did have a rate cut of 25 basis points. In the last announcement, having a rate cut of 25 basis points, that is massive. We saw a lot of stimulation in the economy. We saw a lot of people that were waiting on the sidelines to get a home actually jump in and start looking at homes again. So with interest rates being lower now by 25 basis points, that's been a good thing for Canadians overall. You doing all right there? I think she's doing just fine. She's just getting comfortable. So what's the bond yield been up to? I'll take a look here at what the bond yield's been up to. Last rate announcement, we were at 2.639%. And because it changes every second here, I'll take a look at the most recent data right from here. And we are at 2.67%. So that tells me a lot right now. With the bond yield actually being higher than the day of the last rate announcement, it does not indicate a rate drop today. That actually indicates rates staying the same. And that's very interesting. Unemployment's been up over the year, 0.8%. We have talk of tariffs. The last rate cut was 25 basis points, but the bond yield, and that's what the market predicts the rates are going to be at. The market is predicting that rates are going to stay the same. All right. And actually, the banks use the 5-year bond yield to make their decisions on where they price their 5-year fixed mortgages. And if we had looked at what the market was saying just 2 weeks ago was for sure a rate cut because we saw high pressures of tariffs. We saw them looking like they were going to be a surety, a for sure thing. But today, that bond yield has spiked right back up over the last 2 weeks. And with the biggest spike happening on, early April there, has eased a bit, but we are seeing that the bond yield market, the bond market is pricing in a rate pause. All right, what else are we going to look at today? We're looking at all the metrics here right before the Bank of Canada rate announcement. If you're just joining me here today, I see we got hundreds of people on this call here across all my channels, Twitter, Facebook, YouTube, Instagram, and LinkedIn. And I'm thanking you for watching. Make sure while you're watching, you like this video, share it with your friends. It would mean a lot to me as I like to get these videos out. Okay, I'm just going to grab a paper towel here. Having my pet on here is not always the greatest thing. All right. There we go. So what are we going to look at here? We're going to look at the Bank of Canada rate announcement. We have it coming up in just a moment here. In about 6 minutes, we'll have that data here for you. And we're going to have a prediction by my little girl here, interest rate. We'll see what she says in just a moment. I want to make sure I leave time to have her predict. I've had her off the lettuce and the hay for a little while now. If she eats the lettuce, rates are going down. If she eats the hay, rates are staying the same. And if she doesn't eat anything, rates are going up. But she usually eats everything and anything. So it's going to be one or the other. I don't think rates are going up today. She's like me, just perpetually hungry, always needing to eat something. All right. What's the 4-year swap rate? And the 4-year swap rate is actually a data point I get from a website called mortgagelogic.news. It's a great website. 4-year swap rate sitting at 2.43%. And that's actually down from 2.69%. That's down about 0.25%. And that indicates a rate drop of 0.25%. So again, we're seeing certain websites data point with a rate drop, certain websites with data point to a rate pause. All right. Articles. Well, articles are saying that the like looking this morning, even we're looking at economists being divided over where they see the interest rates going this morning. We'll have to really look at what the announcement is here in 4 more minutes. If we look at inflation numbers, inflation did go down in Canada. We did have an inflation rate of 2.6 in February, but it did drop to 2.3% in March. So we are hovering around that 2% range. So that's really good news. Inflation being around that 2% range is exactly where we want it. It was kind of scary a few years ago when we were seeing inflation around 8%. All right. Fixed rates, they're still actually lower than variable rates. Just to let you know, if you're looking at getting a mortgage today, you can always book a call with me through the link in the video description below. You can book a 5-minute call or a 30-minute call. We can look at your mortgage. I can give you a free consultation as to where you're at. But fixed rates right now do remain lower than variable rates. And a lot of that reason is because people think that variable rates will continue to go down. And as they continue to go down, if you make that bet, you could actually see your rate go lower than the current fixed rates. But it's all about betting and where you are at the market. Some people just don't care. They want to take the fixed rate, lock in. And that is good too. You have both options. Clients are thinking rates are going to go down as well. And reason why is because with all this talk of tariffs in the news and everyone's talking about it, a lot of clients think that, well, something's going to have to happen to the economy to keep it going if all these prices end up going up. So, all right, interest rate. This is my mascot. Her name is Interest Rate. If you haven't met her yet, she's my guinea pig mascot. She has helped predict a lot of the interest rates here on Canadian Mortgage Weekly, Canada's weekly mortgage video news podcast. And what I'll do now is I'll just put her in her cage here behind me. I'm going to give you an idea as what she's going to do. She's going to either eat the hay. I got her some really nice hay this morning, a different kind that she usually really likes. And I got her some lettuce. And maybe we'll see her eat nothing. So just give me a pause here while I put her in that. And I'll be right back. All right, here we go. What are you going to do? All right, guys. So she's just looking at the hay right now. She's looking at the lettuce. What are you going to do? Are you going to eat the hay? Going to eat the lettuce? Or do you think rates are going up? Okay, she's just looking at both here. I'm watching her there. I'll give you an idea of what she's going to do in just a moment here. And again, my mascot's name is Interest Rates. She does predict the interest rates usually. She's gotten one wrong in the last few years. So a very good track record. And she kind of did pee on my pants this morning, which is unfortunate. So I'll have to change a little bit after this episode's done. But hey, we do these things to give our pets a good experience, and she'll love being able to see herself on the YouTube video. All right, we have about a 1 minute delay here until we get the interest rate announcement here. And looks like she is eating the lettuce, everybody. I hear her crunching away, so she's actually indicating to me that rates are going down. So let's see if that's going to be the case here. And just give me 1 second, everybody. I'll bring up the policy interest rate here from Canada. And let's see what they're saying this morning. Let's see what the rate announcement comes in at. Actually, interest rate got it wrong this morning. Bank of Canada holds the policy rate at 2.75. So as of this morning, we've seen two things happen. One, my mascot got her prediction wrong. She thought rates were going down. However, rates stayed the same. So that's what happened. Rates are staying the same this morning, everybody. Let me get into what that means for your lending products this morning, because a lot of people will still be confused, like, why have fixed rates been going down but variable rates stay the same? Well, if you have a fixed rate mortgage, you're going to see really no changes, right? You're not going to see any changes to your rates. You're not going to see any changes to your to anything that way. And if you can just hold on a moment here. I have to take this call here.
Hello.
Hi, this is Joe.
Hi, sir. Sorry to bother you. Expected to call it Home Comfort.
That's great. How are you?
I'm pretty good. I know you got an appointment today for a 75-gallon install. We are available a little earlier today. We can be there for around 11:30. Is that okay?
No, I can't do that. I have an appointment at 1 and I am going to be only available at 2:30. Oh, sorry, 2:30.
2:30. Okay, so nothing earlier than that. Okay, so I guess I'll have to see you for 2:30.
Okay, sorry about that. I tried to let them know yesterday.
No, no, no. It does say that on the notes. It's just that we have a little opening, and I figured I would just why not? Because sometimes, some customers like the earlier appointment, and you have to register, right?
I get that. Yeah, we just so we'll see you at 2:30. Okay, thanks very much.
Not a problem. Take care.
You too, bye. Sorry about that, guys. As I needed to take that call, something else that happened. I lost my hot water, so I have water heater guys coming today, and they wanted to come early. Unfortunately, that's not going to work for us today. So, but having no hot water is never a good thing, because taking a shower in cold water really wakes you up fast, but also it really doesn't help you get your dishes washed, because you really need that hot water for that good scrub. Anyway, getting back to the interest rates, because I know that's why you're all here today. Uh, what is going to happen to your products now that interest rates have remained steady? And one of the reasons why the Bank of Canada actually made that major shift today about keeping rates steady is because they do mention inflation being steady. And actually higher than it was in February at 1.8%. So there is trade uncertainty, but it's not for sure, right? This trade war that's happening, it's not impacting us right now in a big way, they're saying. So all good news there. But if you're just joining me here today, rates have stayed the same. There has been no rate cut as of this morning. So if you're hoping for a rate cut, that did not happen. Rates are staying the same today. There's no rate cut. And that's going to mean that anyone with a variable rate mortgage, their payment is going to stay the same. You're not going to see any softening on your mortgage payments or any reduction on mortgage payments. Some people have a variable rate mortgage where the length of the mortgage actually shortens or increases based on the interest rate. And what we see there is that there's not going to be any change there for those types of variable rate mortgages either. Also, for home equity lines of credit, we are seeing that because rates are staying the same, the minimum payment for any home equity lines of credit will keep the same. So we will not have any reduction in interest rates for anyone with a home equity line of credit. We will not see any reduction in minimum payments for anyone with a home line of credit. A home equity line of credit is a line of credit that you have attached to your home. And if you don't have one of these, it's really important that if you ever want one of these, you can get one set up as an emergency line. So if you ever have a mortgage and you can't make a mortgage payment, or you need expenses for emergencies like a medical expense or anything like that, you can actually draw those funds from your home equity line of credit. And that's at the most competitive interest rate across all the different readvanceable credit options, because a home equity line of credit is usually around prime plus 2.5%. Whereas if you're looking at a credit card, that's 19.9%. If you're looking at an unsecured line of credit, that's usually prime plus 8. So you're looking at something in the double digits. And if you're looking at secure lines of credit that you can get through your bank, typically that's prime plus half or prime plus 1. So if you really want a good solid option for a home equity line of credit, the best way to do that is to get it through a mortgage broker, and we can get that set up at prime plus 2.5. You can even have a line of credit attached to your mortgage, so you have your mortgage and line of credit together, and that way if your mortgage is getting paid down, then the line of credit balance available to you is increasing. So that's something else to consider. It's a really good option to have if you ever need it for an emergency. But just to let you know, because the Bank of Canada has kept rates the same today, we're not going to see any changes on those products. And any minimum payments that you had before are going to stay that way going forward. Now, you never know. Maybe we'll see this trade war from the Republicans in the United States really take off shortly and start impacting Canada in negative ways. And if it does, we will see some interest rate reductions in Canada, because that's the only thing really the government can do to help impact the trade wars that could happen with everyone here in Canada. I'm sorry about my video here, everybody. It keeps glitching here a little bit here with my background, but I'm not sure how I can fix that right now. I'll have to look at it for the next episode. All right. Anyone with a variable rate car loan, you will also see no changes going forward for your variable rate car loans. Those car loans will have the same payment and the same length to them. No amortization changes there. Anyone with an unsecured line of credit, those rates are a little bit higher than secured lines of credit, like I had mentioned. Unsecured lines of credit typically carry an interest rate of prime rate plus 8%. Sometimes you can get a little bit of a better rate at prime rate plus 6% or prime rate plus 5%. But typically they start around the prime plus 8. And those interest rates will stay the same. We'll not see any changes on that. Anyone with a variable rate credit card as well will not see any changes on minimum payments or interest rates charged on those products. If you're just joining me here today, the Bank of Canada has kept rates the same. Rates are not changing. They've kept the policy rate the same. They cited higher inflation over the last few months as being one of the reasons. And another reason is, even though there's trade war uncertainty, there's not enough uncertainty that's impacting the market in a negative way. So very interesting comments out of the Bank of Canada in Ottawa this morning. Also, we did see the bond yield indicate that there was not going to be a rate decrease today. We talked about that a little bit earlier in the episode. We saw that last week or the week before the market was pricing in a rate increase. But for whatever reason, over the last couple weeks, the bond market has removed that expectation of a rate decrease. All right. So when's the next rate announcement, you guys are thinking? Since we had our rate announcement today, you might be thinking, when is the next one? Because I like to cover these. I like to make sure that we cover these on Canadian Mortgage Weekly, Canada's weekly mortgage video news podcast. And with it being on April 16th, the next policy rate announcement will happen. Let's see here. June 4th. So June 4th will be the next one, everybody. That gives us just over a month and a half before the next interest rate announcement. And I think at that point, we'll have a clearer idea as to what's happening with this trade war with the Republicans. But if you're just joining me here now, I had my mascot interest rate on the call with me. She unfortunately got the prediction wrong today. She predicted rates would go down, but rates actually stayed the same. So with rates staying the same, we're just talking about how all these lending products that people have, like variable rate car loans, variable rate mortgages, home equity lines of credit, unsecured lines of credit, and variable rate credit cards or secured credit cards, all those interest rates will stay the same and the minimum payments will not change, and you will not have any changes to those payment schedules. So if you're looking for some clarity with that, you can go home and sleep tonight well, thinking that, well, none of my costs went up. They simply stayed the same. So things that could impact next month, June 4th rate announcement would be tariffs. If tariffs do come into play in Canada, that will be one thing that will impact Tiff Macklin's decision on this rate announcement. The other item that could impact interest rate announcement would be inflation. And inflation did spike a little bit in February at 2.8%. We're back down to 2.3 right now. 2.6 to 2.3. So if inflation continues to go down back to 2% even, or even under 2%, and that could actually happen very easily because with Mark Carney now pausing this carbon tax, we could see gas prices bring inflation down by June 4th quite a bit, because gas prices have not been this low in years since Mark Carney and the Liberals originally put on the carbon tax. So with the carbon tax paused right now, we will see inflation come down, and hopefully they will not bring it back. I know they're saying it's just a pause, but I'm really hoping and praying that they don't bring it back, even though they're just saying it's a pause. Looking at everything else here, we are looking at the last biggest increase. If we want to look at historically, we saw a 100 basis point increase in 2022 on July 22nd. So it's been a few years now, almost 3 years since we saw that big increase. Last time there was a rate decrease was actually the last rate announcement. That was of 0.25%. And the last time we had a pause actually was March 2023. So the fact that we are pausing in April 2025, that indicates something there, because we've been kind of moving every rate announcement by a little bit right now. And now we have a pause for the first time in a few years. So some interesting news that way with us having a pause now. Looking at the data here, since March, we've seen rates fall every time. So this will be the first pause. March 2024, first pause in a year since we've started this rate decrease cycle. And I'm interested to see, is this pause going to linger? Will we see further pause in the next rate announcement on June 4th? I'm interested to hear your comments. So looking at some of the comments, I know we have a few hundred people on this call right now. We need a guinea pig cam. Yes, I agree. Fixed rates may go down in May. Fixed rates follow a different market, the bond market. I did see fixed rates go down it's a great question, by the way. Fixed rates, they go down about 2 weeks ago, but then shot back up a week later. And that's when Donald Trump and the Republicans were teasing the tariffs and then pulled them away, and teasing the tariffs and pulling away. So as they continue to tease these tariffs, we'll see how the market responds. And usually as they tease the tariffs, the market tends to respond by showing that they expect lower rates. But when the tariffs are pulled out, then the market responds with, well, these lower rates probably will not happen. All right. Some other people asked, as I rushed to the bathroom, I felt this warmth run down my leg. Yes, I did feel my guinea pig interest rate definitely took a bathroom trip on my jeans today. So unfortunately, I will have to change after this episode. But thanks for watching, everybody. Today, if you're just joining me here today, the rates stayed the same in Canada, so there's no rate cut. The rate cut was a 50-50 chance today because inflation was a little bit up and the tariffs were pulled out. So with the talk of tariffs, it really did bring fixed rates down, but variable rates are going to stay the same. We could see variable rates fall in June on June 4th. Join me next time for the next live episode for Canadian Mortgage Weekly Live, and that'll be the Bank of Canada rate announcement, episode 187. That'll be on June the 4th. In the meantime, thanks for watching. Thanks for joining me and my guinea pig mascot interest rate. I'll try to have her back here if she doesn't get too camera shy, and we'll try to get that guinea pig cam as mentioned in the comments here below. So thanks everyone for commenting as well. Thanks for watching. Don't forget to like and follow. And if you want to book an appointment with me, my name is Joe Bladdock. I'm a mortgage broker across Ontario, and I have a video link in the video description below where you can book a 5-minute or 30-minute call with me, and we can talk about your mortgage there. Thanks, everybody. Hope you have a great day. Thanks for watching. And I feel bad because there's hundreds of people watching right now, but I need to get going and do some work. So I hope you have a